Thursday, time for the Daily Bites. I'm coming from you from the train, so a little bit different today. No charts today. We'll definitely have a review of some charts on Monday. Apologize for all the noise in the background. Hear some people talking and so forth. Kind of interesting here, so everybody can see I'm leaving New York now, heading back home to Boston. So just a couple things I wanted to share with you this morning. As we're approaching the 50-day moving average on the S&P 500, the Nasdaq actually. That's an area we've got to watch very, very carefully. So if we break that level, then we're probably going to be heading much lower on the indices. So we do see that the future mostly about 5 days in a row. That's quite a bit, and that has lost a lot of ground this week. Just alone, Monday, Tuesday, and Wednesday, probably more than 4% this week. So it's gotten off to a really rough start in the month of December. And, listen, after a big move up towards the end of November, it was kind of normal and natural to see some profit taking happen. And as we head into tomorrow, we have the PPI numbers going to be coming out before the market opens. And we'll also have a CPI early next week, along with the Fed meeting and decision later on in the midweek. So a lot of stuff happening over the next 4 or 5 days. But I want you guys to keep some dry powder. It's really important to do that. As you noticed, the last 2 or yesterday, a lot of volatility. We saw the markets really shoot up higher and then down and then back down. This is a chop market, and if you're not timing your trades precisely with perfect execution, you're going to get chopped up. And in this market with volatility where it is right now, you're not getting paid to take a lot of risk right now. The VIX at 22%. Volatility is rather low, and we do see option prices compressed, and that's for calls and puts. So basically, if you're paying up or paying down for some calls or some puts, you're really not going to get much movement on those. And I mean, listen, if you make 10, 20, 30%, that's all you're going to get, and that's probably a good place to start taking some profit. So we do have some other economic data later on today. I'm keeping an eye on the obviously jobs claims just came out. Didn't see that yet, but also we'll have at the end of the day the Fed balance sheet. See where that's at. That comes out about 4:30 p.m. Eastern time, and then again tomorrow is the PPI number. And we have a little bit more data. I did see that the individual investor II data came out, and the bulls actually increased over the last week. I didn't see the AAII number yet. I'll be taking a look at that a little bit later on today. But for the most part, listen, this is a market you've got to be careful with right now. We've tested down in that 3,900 level, close to that a few times already over the last week. And it seems like there's some bid down there at 3,900. But if that breaks, there's some significant downside. There's a gap down at 3,748, which is the gap from the CPI day in November. And if we break all the way down to that level, there's going to be probably some more significant downside, but it may take several weeks to get down there. So all I'm saying is if we break 3,900 and maybe get a follow-through day after that to the downside, have some put protection on and start getting ready to play the downside. All right. In the weakest part of the market now, and if that continues, it's going to drag the rest of the markets down, the S&P and the Dow Industrial. So I think it's going to be it, everybody. Again, train leaving New York, heading to Connecticut, and then into Massachusetts. Wow. So thank you for listening, and hope everybody has a great day and a great weekend. And again, keep it tight and take some profits when you have them, and keep some dry powder. Just watch and observe things going on. That's basically what I've been doing mostly for the past couple of days. Booking some profits on some puts, but keeping the powder dry for right now. Thanks, guys. Have a